Hello, once again, this is Antonio, and I'm coming at you with another exciting video. Now, I just recorded a whole video and it didn't record, but nevertheless, let's dive right in. This video is speaking about why are you paying more or why am I paying more for auto insurance when my financial background may be at a certain level, my education level, there's no crime in my neighborhood, yada, yada, yada. But at the end of the day, why am I paying more for car insurance? Well, let's dive into it because this video may help a lot of you think before you purchase a home or even rent in a certain neighborhood. Because banks and other financial institutions are using what is called redlining. So let's go on and dive into this video so you can get a full understanding of what is redlining. And then from there, we're going to go ahead and dive into the second half of this video.
What is redlining? Redlining is the discriminatory lending practice denying access to federally backed mortgages and loans to certain communities based on race and ethnicity. It all started in the 1930s. During the housing crisis of the Great Depression, real estate moguls such as Springfield's Harry Kissel laid the groundwork for the National Housing Act of 1934. From this, a new federal agency was formed, the Homeowners Loan Corporation, and with it, residential security maps that became the standard to determine the best places for housing investments. White communities with strong racially restricted deeds were given a grade A rating and identified as desirable for lending purposes, while black communities, regardless of their economic status, were given a grade D rating and branded as hazardous and high risk. No federally backed loans would be made there. Redlining locked out millions of Americans from accessing mortgages and stunted opportunities for black families to build wealth to pass down to future generations. Although the practice of redlining was outlawed with the signing of the 1968 Fair Housing Act, the damage was done. Segregation was embedded in our cities and suburbs. Living in segregated communities has modern-day consequences, including sharp disparities in family wealth, education, and life expectancy. These maps were made more than 80 years ago, and yet they still tell a story that impacts us today, the story of redlining.
All right, so now that we got a clear picture of what's redlining, let's talk about clearly what why it make it affect you. Not only redlining affects your housing, uh, the price and the appreciation, the value of your house, but it also affect possibly your health insurance, life insurance, car insurance. It affects your utilities because in certain areas, saying certain power lines and things like that, you may pay a higher premium. So don't get it twisted. Redlining has a deed effect in our society. Now, let's talk about this. Redlining is a controversial car insurance practice where certain communities pay higher rates for car insurance. In this article, we're explaining everything you need to know about redlining and how it affects your auto insurance premiums. And like I said, it not only affects your auto insurance premiums, but it also affects you so many things and aspects of your life, your daily life, and you don't even know it. All right. So how does redlining mean? What does redlining mean? If you guess that redlining has something to do with red lines, then you're partially correct. Redlining is an insurance term first introduced by sociologist John McKnight in the 1960s. But clearly from the video, you see that the practice was around a lot longer than that, right? Matter of fact, let's go ahead and my headset's about to die. So, one moment. All right, so let's go ahead and remove that. All right, sorry about that. Testing, testing, testing. Let's get back in it. Banks and insurance companies declared certain zip codes, neighborhoods, or communities to be high risk, so they refused to do business in those areas. So you clearly see and has a deed effect of how you live. Some neighborhoods had high rates of car insurance fraud, for example, while others had high rates of vehicle theft or vandalism. Some insurance companies would literally draw. Okay, hold up. Some insurance companies would literally draw a red line on a map outlining their coverage area. Insurance salespeople were prohibited from doing business in any area with red lines. So there definitely was a racial undertone in this whole thing because it came down to race, but it wasn't always uh it never 100% came down to the amount of money that you made, your education background, the crime in the area. It just was a racial red line. And it was definitely bias of what happened. All right. Insurance companies might charge significantly higher rates to any drivers living within the red line area. However, sociologists like John McKnight realized a trend. Maps tended to be redlined based on racial, religious, or ethnic lines. Insurance companies were using redlining to charge higher insurance premiums to certain neighborhoods and communities, even when risk was equal. Because of redlining, a car insurance company might be accused of selectively raising insurance prices in a low income neighborhood. Or a health insurance company might be accused of denying coverage to someone of a certain race. Home insurance companies were also accused of charging higher insurance premiums to certain ethnicities. Redlining gets exposed in the 1980s. Redlining was a common practice in the insurance industry for decades. In the 1980s, however, redlining gained nationwide attention when journalist Bill Deadman published a series of articles titled The Color of Money. The articles explained the racial inequality of redlining. Deadman's investigation revealed that banks would lend money to low income whites, but not to middle income or upper income blacks, for example. And who was just accused of doing this? Navy Federal, where Navy Federal were caught red handed not giving out loans to black Americans who had a 800 credit score, $100,000 in the bank, and they still refused to give that individual a home loan. I don't want to make this video like it's full of racial undertones, but we are just talking about the principles of redlining and how it has an effect on racial tensions, right? In other words, banks weren't really using risk to calculate insurance premiums. They were using redlining to mask racial segregation. Dedman realized a Pulitzer Prize, received a Pulitzer Prize for his work. The insurance company's redlining practice were exposed, and some states took action against the practice. California, for example, passed a referendum in 1988 to ban redlining. Think about it. Redlining was abolished in 1968, but it wasn't until 1988 did California take steps to block it 20 years later, and it saved drivers. We're going to get to that. So, a report from the mid 2000s found that the referendum had saved California drivers over 1 billion since being enacted. So, when you look what's happening, and this is so important, we all have to pay car insurance. And yes, there are a lot of people out there doing stupid stuff on the roads, but all shouldn't be punished for this. But redlining is affecting us all. And you might be like, well, I mind my business, I don't deal with my neighbors, but it's a one for all effect that the insurance companies are doing. States made efforts to end redlining, but redlining is still around today. Insurance companies and banks are regularly accused of redlining. For example, car insurance companies continue to be accused of charging higher prices to certain races or ethnicities. In July 2014, for example, The Guardian published an article finding that white drivers paid 15% less for car insurance than black drivers, even though the drivers had equal risk profiles. If you want to save 15% or more on car insurance, you may have to move to a white suburban neighborhood, explained the article. Some drivers interviewed in the article found that the insurance premium skyrocketed after moving to 5 minutes down the street. Drivers in the inner city Detroit, for example, pay an additional $1,200 for car insurance per year on average compared to drivers in the suburbs. You might argue that it's more than a risk than race. Don't certain neighborhoods have a higher risk than others? Don't certain neighborhoods have a higher risk rates of break-in, theft, vandalism than others? Why can insurance companies charge higher insurance prices for drivers who live in a high-risk neighborhoods? Unfortunately, studies have shown that even when risk is controlled, drivers in predominantly white neighborhoods in the United States tend to pay significantly less for car insurance than drivers in predominantly black neighborhoods. In 2017, ProPublica.org published an article titled Minority Neighborhoods Pay Higher Car Insurance Premiums Than White Areas with the Same Risk. Our analysis of premiums and payouts in California, Illinois, Texas, and Missouri shows that some major insurers charge minority neighborhoods as much as 30% more than other areas with similar accident costs. Now think about this, right? California said they abolished it, theirs, but you still see that it affects is still there in California. It didn't go nowhere. Sometimes it get a new title, but the practices are still there. Now, is redlining wrong? Redlining for ethnic, gender, and religious reasons is inappropriate. However, critics argue that free markets allows the always develop natural red lines. A business will only operate in the neighborhood if the business can make a profit in that area. If someone parks their car in the street in the neighborhood with a high risk theft, break-ins, and vandalisms, then that person will pay less for car insurance than someone who parks their car in the block garage at night. Of course, as mentioned above, racial based redlining continues to exist in the United States, even when risk is equal between two neighborhoods. For that reason, redlining continues to be a controversial practice. All right. Car insurance companies can and do charge premiums based on zip code. So we're going to read this last thing. How does redlining impact car insurance premiums? Redlining may not be officially legal, but insurance companies still use your location to calculate insurance premiums. Today it is perfectly legal for a car insurance company to alter your insurance premiums based on zip code. So we're going to stop that there. And like we saying again, you clearly see these practices, it is what it is. These are the practices, and this is how everything go. Nevertheless, this is Antonio with Team Tiggio. Please like, comment, subscribe, as we'll be coming to you with more videos in the future. And once again, we will see you in the next video.